SoFi stock has more than doubled in just the last 3 months, showing off an amazing appreciation in the stock, but with that has also attracted a lot of new investors. In this video, I wanted to show you quick reasons why I've been a SoFi bull for many years and why it might attract you as well. Now, this is not an indication for you to go out and buy this stock, just a quick introduction to the company before you go ahead and watch all the earnings calls, interviews with Anthony Noto, the fireside chats with Chris Lapointe to get a better understanding of the company. So this is not an excuse to not do your own due diligence, but just a quick overview of a great company called SoFi Technologies. Ladies and gentlemen, let's first start off with the first 4 reasons to buy SoFi. First up, I like a company that has a proven track record in a total addressable market that is absolutely huge. That means how large is it for them to go after every single customer with every single product? How big could they possibly get? Okay. I want a company that also is growth mode in nature, meaning I don't want a company that has large companies that are trying to disrupt it and they're trying to survive. I like a company that is the one that is trying to disrupt, okay? Growth mode. Digital processes, okay? I like a technology-based business. This leads to better productivity and higher margins overall. So digital in nature businesses is usually where I like to hang out. And I also like to follow a company that has a long-term mindset, which means that there is a decade plus of potential for me to hold on to this business. So then I don't have to worry about if the company is overvalued or undervalued at a time, because I know that going forward, there's so much more potential into the future. Starting with number 1, new player in a big market. Like I said, total addressable markets are huge, and SoFi is playing in a very big one. The global fintech revenue expected going from 2021 to 2030 is expected to 6x. Okay. In 2021, fintech penetrated about 4% of the overall banking revenues. And in 2030, it's projected to be around 13% of all banking revenues. But yet, the valuations of those stocks is expected to get to a quarter of all banking related stocks put together. This would make up for a quarter of their valuation. Probably the number one reason to believe this is that customers love fintech products. And in fact, even in this example, SoFi is rated as the highest one with a 90 NPS or Net Promoter Score, which judges the satisfaction and loyalty of customers at each individual company. So we're talking about the best of the best brands in fintech here. Now, whenever we look at fintech in general, it breaks into many different segments: payments, lending, insurance, deposits, investments, financial infrastructure. There's so many different areas and different companies that are dominating in each one of these. So picking your preference is very important. SoFi has a total member base that is growing all the way past 11 million members and is actually expected to break a new record high in Q2 of 2025. Now, the types of products that they're in is essentially everything that we talked about before. SoFi Money, so more of a payment space, loans, investments, insurance down below, but that's not necessarily their products. They do that through referrals. Everything that you could possibly want, while also having digital financial infrastructure through Galileo, which actually helps them with each and every single one of their products that they have on their platform. So whenever I talk about, how large of a total addressable market, SoFi serves all of them, except for insurance, which is only through referral, but most of these are direct relationships with these fast-growing businesses. And SoFi investors don't just think that they're going to win. We're doing this based off what the market thinks. And the market has said very many times that SoFi's products are among the best. Whether you're rated in different catalogs of best personal loan overall, best accounts for checking and savings, best personal loan for excellent credit, best private student loans for member benefits, the ratings on SoFi's products are extremely high versus their competitors. And their customer engagement has been skyrocketing. So not only have they added on new members, but each individual member is putting more deposits into their account while spending more at the platform, which is probably the highest indicator that customers are loving their banks. Or you can just take a look at the Trustpilot scores that customers have said about the banks that they're banking with. Chime, Robinhood, Vero, those are all fintechs that customers love. They're definitely a lot better than the big banks of Chase, Wells Fargo, US Bank, Bank of America, but none of them really compare to SoFi's ratings overall. And that's really what I'm here to invest in, is the best of the best. For number 2, we have vertical integration. I'll talk more on this as we get through this chapter, but essentially it means that they try to reduce third-party risk and do more things in-house to try to control the quality of the products that they're putting out. So, first off, SoFi is against very many customers, okay? Whether it's banking, personal loans, home loans, student loans, investing products, or budgeting products, there are many customers overall that SoFi has to compete with. It's a very competitive market. The best companies, in order to diversify themselves in very competitive markets, have very vertically integrated systems. So, Apple or Tesla are probably two of the largest examples of this that take on the majority of their processes themselves, bring it in-house, and that way they can control the quality, lower costs, and increase margins. Not only is SoFi its own actual regulated bank, which is very rare in neobanks and fintechs in general, but they also have two other companies, Galileo and Technisys, that also run all the operations in the back end, not only for SoFi, but also for the other fintech competitors that are in their landscape. Very similar to Amazon and AWS, or Amazon Web Services. So, what exactly is Technisys and Galileo? Well, Technisys is the core financial provider, and Galileo is the payment processing side. Okay. As you can see, SoFi CEO Anthony Noto said Technisys and Galileo will be the only company that offers an extensible, customizable, multi product core financial platform with UX, user experience, and UI, user interface, development capabilities, plus payment processing in one stack. Having that information in one stack, in one core, in one ledger just makes the ability to innovate much faster at a lower cost and driving more personalization and real-time decisioning. If I could add really quickly, this is the only company that also has a bank under those two platforms. So it's not just financial infrastructure, it's also being the actual chartered bank. There's absolutely no company that has this all under one stack. You could essentially go to a new fintech, say, hey, we'll host your deposits. We'll help you with loans. We'll help you with the payment processing. We'll do it all under our technology, and you can get this in one bundled price. It's an unbelievable benefit. SoFi is also doing this for themselves. They can help the loans fund through their own deposits, hosted at SoFi Bank. The deposits can be held, like I said, at SoFi Bank, so you're not paying another bank for that. Galileo is its own payment processor, so they don't have to pay another provider for that. Their backend core and ledger, not only is it done for themselves, so they do not have to pay anyone else, but it also means that they can change and work on the processes that are most required for their own business. But just to take a quick pit stop at the actual massive tech opportunity here, which is Galileo, Technisys, and SoFi Bank, we have a unbelievably large market in payment processing, cloud-based banking as a service, payments risk platforms, and everything else in between, which goes from AI usage to chat assistants to crypto development products, everything, okay? And now B2B payments might be the next big space. As Anthony Noto said, 50% of B2B payments still happen by check, which means that there's a $200 trillion opportunity for digital B2B payments over the next decade. It's an unbelievably large unlock. These are essentially the customers that they're dealing with right now. You have massive names like Koho, Dave, Robinhood, Wise, Revolut, Monzo, Samsung Money, Experian, BitPay, all of these different companies that just add on to more and more payments that flow through their bank, which also gives them a massive data moat. Okay, because you're not just getting to see what SoFi members are needing, you're getting to see what every single customer across hundreds of different fintechs are actually needing, which only just gets to serve your customers better because you're getting all of this information in real time. Now, to talk about Technisys really quickly, they are a Gen 3 banking provider, which essentially means that it's completely cloud native. Security is much higher, and the customization is also much higher. Okay, so you're getting real-time data. The ability to shift and actually configure products in real time also happens. So you can change, individual customers' APYs depending on if you're trying to, support a promotion or help with customer service or something like this. It's just much easier that way, and you can develop more products much quicker. This has also allowed SoFi, as they've become more digitally native and just become a more sophisticated, mature business, is that their debt has gone down dramatically, which also means that their debt payments and their interest have gone down as they've scaled and been able to acquire themselves much better ways of acquiring debt at lower costs because they're a much more trusted borrower in a way. Let's just say that. SoFi's market is so unbelievably massive, and they're in such small aspects of the overall market. I mean, personal loans, they make up for about 12%. Home loans, they make up for about 0.14%. Student loans, they make up for 4.22 billion. But whenever you actually look at the total market size of these, it's not that personal loans is a $155 billion market. The market that SoFi is really trying to go after is the $1.36 trillion credit card market. If you can lower the cost of those products, that's going to be a severe benefit. Having $4 billion of writing in student loan debts is a fraction of the $1.77 trillion market that they're really trying to go after. This is the really big deal in what SoFi is trying to tackle here. So whenever you compare SoFi to the fintechs and the general large banks of the world, they are the best of both worlds. They have no branches. They are deposit funded, which is better for them. Okay. Lower customer acquisition cost, a full suite of products, which is very rare in the fintech world. They have clear regulation because they are a bank, strong balance sheet. They also have non-financial products as well, and the infrastructure, tech, and payments. The only thing I would add, because I know I'm going to get some pushback on this, on the infrastructure, tech, and payments, of course, you're going to find some names like JP Morgan that do actually fit a large payment space, but they are a one of one as well. SoFi is the one that I think has the best of both worlds. For number 3, we have growth at all levels. Like I said, I like a company that's in growth mode. SoFi has been growing across the board in their financials. Net revenue, contribution profit, adjusted EBITDA, net income. They usually, as long as you keep the same margin, do climb with each other because they're all on strings of what, net income is doing. So if that goes up, it pulls everything else up with it. But net income is expected to grow very fast next quarter. In Q2, we're expected to see growth rates that we haven't seen in a very long time. And if it actually happens to what I expect to happen, which is get roughly around 40%, then we will not have seen that growth since the midpoints or early points of 2023. And it's the type of revenue that people need to focus in on. See, fee-based revenue mix is the most important part of SoFi these days. Before, they were very much a bank. Obviously, they're still a bank today, but a large percentage of their revenue was made up of lending revenue, which could, if they ended up underwriting those loans poorly, end up backfiring them if we ended up getting into a recession, right? There will be more people that end up not paying their loans back, and SoFi takes that direct hit. If you can bring on some revenue that does not have risk to it, things like payments or SoFi money or debit cards, these sort of things are beneficial to SoFi, but carry no risk with them. That has recently skyrocketed, and most recently in Q1 of 2025 has brought in 41% of overall revenue. And that's expected to grow in Q2 and beyond. This has not only helped raise margins, but will continue to raise margins going forward. So SoFi has been on a great trajectory of not only bringing up the revenue, but also bringing up the quality of that revenue, which will make investors like the stock a lot more. And like I said about Technisys, as it converts over to SoFi, this is going to save them tens and tens of millions of dollars, almost $100 million a year, just based on them using their own infrastructure. So that's very important as well whenever you're talking about healthy growth. Whenever we look at all of their products side by side, each in an individual quarter, whether it's personal loans, SoFi Money, Invest, credit cards, SoFi Relay, they're all up and to the right. That's a very exciting place to be. Not only that, once again, but although we're hitting record levels of new member adds each and every quarter, the quality of those members and the average revenue per financial services products is climbing to new highs as well. Okay, so that is a very hard statistic to do. That's what we want. We want compounding companies that are compounding on top of compounding. Okay, that's where you get really generational businesses. So you think that Wall Street would be behind a company that's actually like this, but for the most part, they've actually been pretty negative towards SoFi, and for no reason at all. SoFi has outperformed their expectations every single quarter since being a public company. So make sure you keep an eye on not only their outlook, but also how much you might think that they might outperform their outlook going forward. This has been another piece that Wall Street has sort of picked SoFi apart, is that potentially their underwriting quality could, deteriorate over time. But we haven't seen any evidence of that at all. In fact, it's gotten much better over time. And each individual loan that SoFi is essentially writing for their users makes it better and better because they have more data. And in fact, whenever they go out to the market to sell their loans, which is a big part of SoFi's business, not only are they writing it to host it on their own balance sheet, but they also sell their loans. The way that they write their loans, which is in this black line right here, versus the levels that they sell them at, is always higher. So it means that the market appetite for the level that SoFi has their loans at is higher than what they're even hosting their balance sheet at, which just goes against all the bear cases of what SoFi's, negative analysts have to say about the company. And lastly, for number 4, the future looks bright. I'm not just excited about SoFi for what has happened, but I'm excited for what's to come. See, SoFi has Galileo. Galileo ends up putting out new products that continuously expand how large financial services could actually take over, especially in a digital light. Okay. Teen accounts is a very big one. You want to get accounts on very early because then they can transition older and older, and those customers usually have no reason to switch off. So, teen accounts will expand SoFi's total addressable market. We haven't seen anything on that just yet. They also are very small in the credit card space. That at the time that Anthony Noto said this quote, they only had one credit card. And he said back then that they wanted a portfolio of 4 credit cards. Today they have 3, and they've already leaked a potential 4th, what they call independence card, which could be a very good play on high cashbacks that actually goes into SoFi Money as another investment product, which could lead to great cross sale. The total credit card market in the world is unbelievably huge, okay? $16 trillion, and SoFi's just getting started. Another massive aspect in credit I think is very important is secured credit, which essentially is almost like a debit card that helps build credit over time. You're only allowed to spend what you've put into that account. Now, Galileo offers this to their customers, but SoFi doesn't have access to these products just yet. Whenever they roll it out, I think that's massively total addressable market expansion, and that'll be very exciting. Not only that, small business banking built for SoFi, Galileo, everything that SoFi has, whether it's SoFi at Work, Galileo, being a bank, lead into being a small business banking giant in this space. As Anthony Noto said it back in 2022, the small to medium business is absolutely one area we will get into. But we need to continue to show that regulators how well we can get into consumer before we ask permission to add into other products like SMB lending and SMB checking and savings. There's a lot of demand for it. We get requests every day. Very exciting, and they are very well positioned. They're also very well positioned for crypto. We're seeing job applications go out constantly, not just for crypto coin trading, but for everything. Okay. Infrastructure, custody, key storage. They want to do everything for blockchain, right? Even lending, all the products that they're currently doing in more of a blockchain environment. So that's important. And lastly, I would say the loan platform business is by far their largest opportunity. This is the idea of not just offering loans that go on their balance sheet, but go directly towards customers that potentially don't have customers to sell loans to right away. Hedge funds, pension funds, insurance companies, these types of companies that have billions, hundreds of billions of dollars, but they don't have customers that they could actually sell loans to. But they would love access to the returns that loans bring. So they end up buying them from a customer like SoFi loan platform business, and that has been an unbelievable success. Anthony Noto even said, one thing that we've contemplate is we could push all of our lending into the loan platform business over time, and I'm not opposed to that at all. The economics are very attractive, the velocity is much higher, and the capital is lower. You have a lighter balance sheet, it would really support higher return on equity, okay? So think about this business. One that comes with Galileo, that helps lower research and development costs, bring new products to light at high speeds, more customer data, very reoccurring business, extremely low risk revenue. Unbelievable. And you also have the loan platform business, more underwriting data, better margins for SoFi, more cross-sell to other products because their customers might come for loans, but then they might also get SoFi Money or SoFi Invest or all these other products in their suite of products. And it could be recurring in nature, and it's extremely low risk revenue because we never host those loans on the balance sheet. SoFi is an absolute juggernaut of a business. They're not like any bank or fintech that people could pin them towards. They're very fast and agile like a fintech, while also being very vigilant on their underwriting like a bank. Those are both beautiful things. They have very high FICO score, high income customers that they try to go after, and the execution has been nearly flawless even in the hardest of times. So I'm going to be here holding SoFi stock through the $20 ranges, 30, 40s, and even 50s. And at the end of it, I hope that I'll be sitting back on a beach with a nice drink and know that I had the patience to hold on to some of the best businesses in the entire world. Because that's what long-term investing is all about. Betting on the best companies in the world, like I think SoFi is, and just being patient throughout it. Well, while underwriting it each and every quarter. And that's why potentially I suggest that maybe you guys subscribe so that we can continue to underwrite these businesses over time, make sure that we're making the right decisions. Ladies and gentlemen, thank you so much for watching. Really do appreciate your time, and bye for now.